Hello out there and good morning, traders. It is December 12th, 2023, and welcome to the Apteros Daily Market Insight, or DMI for short, which is essentially our pre-market prep and our plans for the session. Now, what we usually do here is we start with a recap from our last DMI, and then we will update our levels for the current session and plan out our different scenarios for what could evolve during that session. So let's dive into our recap first, and then we will update our levels for today. So taking a look at yesterday, we had three basic scenarios, three basic ideas. Scenario one was that we essentially pull back from that bearish line in the sand, heading down into this bullish area, and then we remain rotational inside of that zone. Scenario two, which was kind of built off of our main line in the sand and our main idea, which I mentioned in yesterday's DMI that we were watching the bullish side of things more closely, was a breakdown of that bullish line in the sand. In other words, if we got down into this section here and we started to see things shift against the bulls, we would be more than happy to go with the bears if they broke down this bullish line in the sand and continued to the downside to some neutral targets down below. Then, of course, we had an alternate scenario, which was scenario three. Scenario three was that we don't get the continuation to the downside, and scenario one doesn't fully play out, and we end up seeing a push from the bulls to the upside, breaking down this bearish line in the sand area here and continuing to the upside. Now, a couple of important notes from yesterday, mentioning that this upper line in the sand was nowhere near as important as the lower one. The lower one was really our main idea on the whole session, and the bullish side of things was really what was more important to us, which is why we had two scenarios, scenarios 1 and 3, that were more focused on bullish activity from this lower zone. What we ended up seeing in yesterday's session was the start off, or the start of it was really scenario 1, and then we switched into scenario 3. So how did that play out during the session? Well, as we were kind of prepping here, we started to see scenario 1 throughout this section here, and it was possible to start looking at scenario 1 to the downside here all the way through the morning, up through the open, and kind of through the first hour of trade. Scenario 1 just never had any legs. It never got below this little support area around 46.54-ish, right? So it never really broke down any of these lows here. And that's where we started to get our first bit of information that it was possible we were going to see a switch into scenario 3. Then in this section here is where we actually saw the market break to the upside, and a lot of what we were looking at there was a switch or a transition into scenario 3. And then from there, it was pretty straightforward. It was just about staying with the bullish idea that we had laid out in scenario 3 and continuing with that all the way through the session and into the following day. We still haven't hit our 4,700 target yet, but as I mentioned in the pre-market prep yesterday in the DMI, it was one of these situations where this is kind of a stretch target up here, and I was mentioning that essentially if we broke up above this bearish line in the sand, we're going to have to be kind of trend following at that point and monitoring targets from that perspective. If you didn't have a way to do that for yourself, in other words, you didn't have the full Nadro tool set at your disposal, and you're just kind of following these DMIs for now, essentially it was, get long here and hold into the close from yesterday, and that was pretty much it. Okay, so let's update our levels for today and take a look at what's going on. Okay, so taking a look at the levels for today, we have a couple of bullish lines in the sand. Now, what's really important about today is that we do have a major economic release coming up. So that can often introduce a lot of volatility, and what we could end up seeing is some pressing around these areas here. So let's talk about the different scenarios and how they could play out. First, let me just generally cover what's happening in this market. We have two lines in the sand that are both bullish. However, the lower one is a little bit more important because there's more confluence down in this area. So what I'm essentially telling you here is that if the CPI number drives this market down, this is the main line in the sand for the overall bullish picture. And that's what we're really paying attention to for the bull side of things. Okay, now the upper line in the sand is a little bit more single reference type of thing across our different time frames. So essentially what we're looking at here is if we hold this bullish zone, we have a very bullish type of scenario where all of our time frames are kind of aligning to the bull side of things. If it breaks down, right, and we continue to the downside, this bullish zone would become bearish, and we'd be watching for a continuation down into our main line in the sand, or our main area where the bias for the bulls holds true. Okay, so now let's break down the different scenarios here based on these two lines in the sand. So our upper line in the sand in the current scenario, which is scenario 1, this would be maintaining a very bullish posture in the ES. In other words, that CPI number could possibly drive us up into our overall destination, which was that 4,700 area, and then we could possibly even get a continuation up into the stretch target here, which is around 47,1250. Okay, so that's the overall idea there with scenario 1. Now, scenario 2 is a breakdown of this upper line in the sand. So if we break down underneath it, this is a good opportunity for a scalp to the short side to possibly come down into testing our main line in the sand in the main area for the bulls for us there. Okay, so that's how scenarios 1 and 2 break out. From there, we pick up our lower line in the sand, and this is really where the rubber kind of hits the road for the bulls. If we hold, that would be scenario 3. So scenario 3 is that we push down, we hold back up coming into this upper line in the sand here. That would be our first target, and then a possible switch again up into this upper zone here around the 4,700 area would be the overall destination with a couple of extensions possible. Okay, so scenario 4 is going to be a breakdown of our upper line in the sand, or our lower line in the sand there. So what we're going to end up seeing here is the market kind of selling off, continuing to the downside, and then we get through that line in the sand and we start looking for lower areas, lower targets here. The 46, 44 continuations possible with neutral references down into the 46, 17s. Okay, so that's the overall landscape and layout of what we're seeing here across the board. Right now we are pretty much bullish, but the CPI number can often bring in a ton of volatility. So we're going to have to pay attention to that and how it evolves during the market. If you're not someone that trades economic releases or anything like that, just sit aside, watch it all come out, watch it all unfold, wait for the open, watch this thing kind of play out overall, and pay attention to our lines in the sand and how the market reacts to them. And then you can align yourself more properly with the different scenarios. So once again, just a quick recap of those scenarios. 1, bullish up above here. 2, bearish down below, right? Then we get down into this area here where we got 3, which is bullish, heading up into this area, and then a continuation in the upside there. Then we have scenario 4, which is a full breakdown of all of the bullish information on all of our different time frames. And if that happened, that would be a considerable shift for the bears looking for the lower side to continue as well. Okay? So mind your risk, trade your process well, and have a great trading day out there.